Ladies and gentlemen, we are starting our next event.
One, two.
Good afternoon, everyone. I am going to get started. They will find us. They will catch up with us as they try to find the room. Your Excellencies, ladies and gentlemen, welcome to this session on leveraging the African insurance industry to create resilient African economies. My name is Boholo Joy Kinuendo, and I am the Africa Director and Special Advisor to the UN High-Level Climate Champions. And it is my privilege today to welcome you to this event. Ladies and gentlemen, we meet again at a very critical time to decide on how to act to save our planet. Here on the African continent, we follow up on the pact made at Glasgow with a COP that was focused on implementation. We are here once again talking about an Africa COP, an implementation COP, an action COP, from summits to solutions, and we want to know and we demand action. We were yesterday at the main opening of the Marrakesh partnership, and there was a young person there who kept speaking to the issue of action. And I am putting it very mildly and politely. She used much stronger words than that. She said consistently, leaders lie, and we need solutions. So I'm very happy to be here today to speak to non-state actor-led solutions that will deliver for Africa an Africa-led solution for Africans, and that will deal with African problems. We're here because the signatories of the Nairobi Declaration are here to share with us an opportunity to turn talk and pledges into real action. As you've heard over the last few days, Africa is the most vulnerable continent to climate change impacts, and under all scenarios above 1.5 degrees Celsius, there will be dire impacts for the continent. Despite having contributed the least, it certainly faces the most dire and exponential collateral damage, posing systemic risks to the already vulnerable economies. Infrastructure, investment, livelihoods, food, water, public health, agriculture, all under serious threat in the continent. And of course, we want to make sure now, with those that are on stage, that we are putting a viable, credible solution that is sustainable, that will make sure that Africa starts to build on its resilience and works on increasing Africa's adaptive capacity. And I am pleased today to introduce this panel that will take us through the solution that is offered by members and signatories of the Nairobi Declaration. Starting off with, let me see who I'm going to start with here. All right, so we're gonna get started here with Leslie. There we go. We're going to get started with Leslie Ndlovu, who's the CEO of African Risk Capacity, who's sitting in the middle. And we also have Dorothy Maseke, who's the Group Head of Risk and Compliance of ICEA Lion Group, right next to me. And we'll have Kelvin Massingham, who's sitting over there. He'll make a comment from the floor. And we'll have Patty Karuhe Martin, right at the end. And lastly, we have Philip Lopo Koit. I should have learned these last names before. I don't like it when people do it to my last name. But here we are, and I am very pleased and looking forward to this discussion. And to get us started is Ms. Dorothy.
This past weekend, in my home country, Kenya, there were reports of a 7-year-old boy who, out of a desperate need to address extreme hunger his family was facing, cooked a meal of chameleons for 2 of his younger siblings. As you may suspect, his younger siblings were later hospitalized. Make no mistake, in my home country, chameleons are not a delicacy. So you can imagine how desperate this young boy was. The following numbers have been reverberated throughout this event. In Africa, over 500,000 people dead of a drought-related hazards. The losses, over 70 billion USD. 1,000 flood-related incidents. 20,000 flood-related deaths. In Kenya, my home country, 4.3 million people face extreme hunger. 120,000 lactating mothers face a dire need of nutritional support. 2.5 million livestock have died or are dead. Our livestock, our wildlife have not been spared either. 273 elephants, 512 wildebeest, 400 zebras, 51 buffaloes, 12 giraffes, all dead in under 9 months. As Kenya faces its worst drought in 40 years. That is our current reality, ladies and gentlemen. And these are just numbers from one country out of 54 countries on this continent. Now, if we do not see the challenges that we face today, challenges of drought, cyclones, and flooding, as threatening our current reality, and more importantly, threatening our future, then I don't know what will. If we cannot tackle the challenges of today, then as insurers, what business will we have tomorrow? As political leaders listening to me today, whom will you govern tomorrow? What will transition away from being a hungry, broken continent? It is for that very simple reason, among others, ladies and gentlemen, that as signatories of the Nairobi Declaration on Sustainable Insurance, we are here today to make a couple of commitments. We are going back to the original intention of business, to support society. We are encouraged that we have an ever-growing ambition from us to address these challenges. And therefore, today we announce the setup of the Africa Climate Risk Facility. This facility is a mechanism to scale private sector underwriting of climate disaster risk in Africa. It will facilitate the uptake of climate risk insurance by African sovereigns, by cities, by humanitarian organizations, in order to help African countries better manage financial impacts of climate shocks and increase resilience of our most vulnerable communities. Now, given the scale of loss and damage finance required, Africa cannot continue to rely on international aid and developed world climate finance commitments as we respond to these climate catastrophes. Therefore, local, market-based disaster risk financial solutions must be developed, but more importantly, must be scaled, with insurance being a very critical tool. The Africa Climate Risk Facility, ladies and gentlemen, is actually a response to this need. At the same time, we know there are challenges. The sovereign demand side challenges of constrained fiscal spaces, which we all know about, and low capacity, and the supply side challenges of technical ability to underwrite these complex climate risks. There is need for donor funding to move the market towards sustainable self-functioning. It is for this reason, ladies and gentlemen, that this facility will also include a multi-donor trust fund to support market-building activities up until 2030. Now, what will this facility do? This facility will provide gradually reducing premium subsidies for sovereigns and sub-sovereign climate risk solutions up to 2030. It will also empower local insurers to underwrite climate risk within their countries. It will provide the necessary technical assistance to governments, to cities, in order to create the right environment for climate risk solutions to be effective. It will also work together with development partners and donors who are already engaged in providing capacity building, such as the Africa Climate Risk Capacity Agency, the Global Risk Financing Facility, and the Insurance Development Forum, of course, among others. As signatories, therefore, we make a pledge today. We are going to underwrite a cumulative figure of $14 billion to cover climate risks by 2030. And this is to protect 1.4 billion people against floods, droughts, and tropical cyclones. Please note, these are cumulative figures up to 2030. So what does that mean? In the year 2023, we plan to cover 140 million people in Africa. Seems ambitious, I can see, by how you're looking at me, but we can do it. But to do this, and as mentioned earlier, we are looking for support from donors and partners to move the market towards sustainable self-functioning. And we're looking for $900 million to ensure this 1.4 billion people by 2030. It's actually that direct. $900 million for 1.4 billion lives. Again, cumulative figures by 2030. Now, ladies and gentlemen, with this facility, no country will ever have to reallocate funds from prior preset priority sectors in order to respond to a loss and damage need. As you can see, this ambition is not driven by some short-term isolated approaches. We are working together as 85 signatories to the Nairobi Declaration. We are connecting all the dots. We are coming together as risk managers, as risk carriers, to ensure we support resilience of our African economies. Now, the call is urgent. The time for action is actually now. We have woken up with one united heartbeat and joined together to build a responsive sector that will play its role in creating resilient economies. A society that is better primed for future disruptions occasioned by climate change. And indeed, we concede, climate change is a moving target. The world is getting hotter, and that's why we are all gathered here, to make things better. But as insurers from Africa, we are here to echo the sentiment of hope. Driven by the African Union ethos, African solutions to solve Africa's problems. An Africa that is food secure. An Africa that is resilient to floods and cyclones. An Africa that can stand on its own 2 feet in the midst of significant climate disasters. That, ladies and gentlemen, is the new Africa that we are pursuing. Thank you.
There is zero doubt about Ms. Dorothy's passion for delivering on action for the continent. There is no doubt on why it is important that we act now. And we absolutely do understand that we are not just making pledges. This is a solution and a very clear and succinct ask. And we hope that many will heed this call. And now I have the utmost pleasure of moderating a panel with the rest of those that I introduced at the beginning of this session. So we have heard Dorothy's passion. I wish we could start replaying your statement now. But I just want to start with you, Leslie. We've heard about the ambition and we've heard about the commitment that has been driven by the private sector. Now tell us, from your African risk capacities focus area, you have been underwriting these risks for some time. Why is more insurance and this particular facility important now? Is there really a need for this facility?
The scale of the problem that we face is so vast that we cannot do it by ourselves. It really requires the collaboration and the cooperation of the entire African insurance industry. And I am really delighted that I am on the stage here with my fellow industry CEOs, working together to develop a common solution, which we believe will be a major difference maker for the African continent. I will say what is unique about this collaboration that we have today is that it is African initiated, it is African led, It is African owned, and it is backed by 85 insurance companies from the African continent. We will not be able to create a sustainable market solution if we exclude the local insurance industry. So the local insurance industry in Africa is a critical part to developing the solution to African problems. They know the risks in their country, in their market, better than anyone, and they are really best placed to underwrite these risks. And then the obvious question I think that can be asked is why has this not been done before? And I would say that the catalyst for this collaboration that we are setting up has been the realization that we have all come to regarding the urgency to act in the context of climate change. In the past 10 years, there is increasing availability of knowledge and of data around the pricing of the climate-related risks. And also, I think as Dorothy mentioned so eloquently in her remarks, that part of what's been missing is the premiums, the subsidization of premiums, which is an essential catalyst for the creation of the market. I think in the creation of a new market, it's normal that you have subsidies in the beginning to catalyze the market. The internet is a very good example of that initially it was developed heavily subsidized by the US government. But out of that, we have now a viable industry which is now underpins everything that we do. And the Nairobi Declaration, in my view, is along that well-traveled path of success. Thank you.
All right. Thanks, Leslie. Philip, you are heading one of the largest private insurance in the continent. Why is it that we need to create this Africa Climate Risk Facility? What value is it going to add to the continent and the insurance industry?
Thank you very much. The Africa Climate Risk Facility is important for us because it makes a difference in the journey on sustainability. The numbers we have discussed, $14 billion cumulatively over a period cover, $2 billion in terms of premium. And the facility will enable us to cover certain risks like floods, cyclones, and droughts. And Dorothy was here just talking about the drought in Kenya. I was speaking to someone yesterday who has, the entity has been keeping rainfall statistics over the last 70 years. And they say that the rainfall this year is the lowest ever over the last 70 years. So some of these risks are here. They're happening now. And this facility is certainly going to help us in terms of capacity, technical capacity. It's also going to help us in terms of sustainable development. And it's certainly going to help us in terms of mitigating the risks that we face as underwriters in dealing with these climate risks.
Thanks, Philip. And for you, Patty, reinsurance in the continent has been seen both technically and financially cited as a barrier to scaling insurance and local private sector participation. How is it, what is your response to this? And how do you see reinsurers also playing in this space in developing the Africa Climate Risk Facility?
Thank you so much for that question. Yes, I just want to give you a brief on where the reinsurance sector comes from and where we are currently, so that and how we will then participate in the African Risk Facility. So reinsurance in Africa definitely plays a very critical role, and especially to the insurance sector. And the key roles that we've been playing is providing capacity, creating stability, strengthening balance sheets and solvency, and especially also mobilizing funds for investments. Now, as you are all aware, reinsurance companies were also started with the aim of retaining within the region parts of the business to be reinsured that was previously been reinsured outside of our own regions. So the aim, since the formation and increasing presence, regional and local reinsurers have curbed the unwarranted externalization of risk premiums, allowing not only for increased investments in the region, but diversification of national economies, but also ownership, employment, and requisite financial sector career development. I can proudly say I'm one of those people who's joined the reinsurance sector, and at my company, at Namipre, we have definitely also trained substantial Namibians in the field of reinsurance. So the reinsurance companies have also created reinsurance capacities which have enabled acceptance and the retention of larger risk in country and regionally as well. Now, there's some statistics I would like to share with you in the sense that from 2004 to 2010, the local and regional reinsurers such as Africa Re, Kenya Re, ZEP Re, East Africa Re have been writing gross written premiums of around 3.5 billion US dollars. As we speak, the Atlas magazine can report that Africa has over 42 reinsurers and on the continent, and we write our current premium as of 2020 has grown to 5 billion US dollars. So those numbers are indicating quite substantial increase in premiums. I'll just quickly share with you the challenges, and then I'll close off. The challenges facing reinsurers and insurance companies in Africa is both internal and external. But obviously, I think the one that always comes up is the experience required, suitable skills and manpower. However, I can definitely say that Africa do have very qualified reinsurers in the continent. Just to close off on how we as a reinsurer can, as an African, now, as the African reinsurers, where we will come in with the African Climate Risk Facility, we will be assisting in remedying the current challenges in providing adequate capacity. Funding can be used for technical product development as well as also for underwriting. So this will obviously allow for economic reliance on the continent, resilience, and it will also make sure that that we as African reinsurers retain our premiums in country.
Thanks, Patty. So I just noticed something. You can tell who's actually in the financial sector and who isn't, because my sneakers, everybody else looks very smart and chic, and I thought, oh my God. Ms. Patty, thank you for that. And I want to, there's a question that just came out of social media, Leslie, and I want to direct it to you. We've been talking about loss and damage, expecting that everybody knows what exactly that is. What is loss and damage? And practically, ARC has been in existence for over 10 years. Give us examples of where insurance has played a role. First, what is loss and damage, where ARC has played a role in covering risk, and give us some of those examples where you were able to respond quicker than, say, those that wouldn't have been in the continent.
So then maybe to give a definition that is not very technical and is sort of...
Basic, very basic, from social media.
Right. So then when you look at natural catastrophes, so droughts, floods, and tropical cyclones, the frequency and severity of those sort of events is increasing. I think we've all heard and seen the droughts that are going on in Eastern Africa, in Somalia, in Ethiopia, in northern Kenya, also in the Sahel, and in Southern Africa. We've seen the flooding that is happening in West Africa, and the increase in the frequency and severity of those events is exacerbated by the impact of climate change. So then what has caused this climate change, right, is the pollution via the emission of carbon dioxide. And then the question becomes who has been responsible for polluting or for the emission of the carbon dioxide. So the actions that were taken by people or countries historically is leading to a severe disruption in livelihoods in the other countries. So generally, this is how the loss and damage discussion is framed. Obviously, I say this with a lot of caveats because I don't want the academics to get on my back because I've...
Yes, but you're not responding to academics. You're responding to a Motswana at home saying,
right.
What is this thing that has become such a big issue at COP27? And I think this just points to one of those things that we must absolutely speak a language that makes sense, because it is, after all, everybody else's planet, not just us. But I feel like Patty wants to come in as well.
Thank you so much. Yes, we did a discussion recently, and that's why I want to assist on that. When loss and damage happen, it can happen where people, say for instance, they have floods, and they have to move from where they are. They have to be migrated from where they initially were residing. Now, what comes with that is there can be economic loss as well as non-economic loss to those inhabitants that has to move. They have to leave their culture behind. They can only take a few items with them. So, and I think we were fortunate enough to have a session just before us on women that were sitting around here saying, explaining exactly what they are experiencing when there's floods, that no funding reach them. And that
Right.
is where it's coming.
Thank you very much. Last question for Philip. Many insurers and reinsurers today continue to still cover high carbon industries. What can you say to those, given that this big discussion now is around net zero and is about science-based commitments? What is the insurance industry? What is the insurance industry's role in all of this?
Thank you. I want to explain that also in the context of the Nairobi Declaration. And I think it's fair to state that we've begun a journey for sustainable insurance in Africa. And in that journey, we're going to have to go in terms of enhancing our capacity, in terms of building the architecture on some of the products, and also just understanding the equation between risk and returns with respect to climate risks. The issue of carbon-intensive industry is an important one, but it's not about one way or the other. Because we are in transition, and this itself will take time. There are a number of factors that we also have to look at. In our economies, we cannot compromise our medium-term prosperity in the context of this discussion. Therefore, as risk managers, we will be seeking to advise our insurers, our clients, on how we can transition, how we can take into account the social and environmental elements with respect to this. And that this has been part of the discussion about a just transition, and therefore we wouldn't expect in the short term to compromise our business principles. However, we recognize that this transition will happen. It must happen, it will happen. And in that context of that transition, we'll work together with the underwriters, we'll work together with the regulators, we'll work together with our development partners in order to build onto that transition. And also in the context of what one may call uninsurable risks. And I think just circling back to an important point you had asked about the Africa Fund, this is actually going to fill in that gap and also just provide us an opportunity based on the capacity that we currently have to take into account some of those uninsurable risks and migrate them to insurable risks going into the future. Thank you.
Thank you very much, Philip. Leslie, last thoughts?
Yeah, if you may just allow me to add on to what Philip has said, that I think that transition cannot happen at the same speed for every single country. So on the African continent, we acknowledge the need for the transition, but it cannot be at the same speed at which it's happening in all the other countries, because context in all of this is extremely important to take into account. Thank you.
Thank you. Thank you. Okay. Thank you very much, Leslie, Philip, and Patty, for engaging me in that very brief discussion. We have exactly 3 minutes to the clock, and I'm going to ask Kelvin to come and give us some closing remarks. And just to recap, we're here with the signatories of the Nairobi Declaration. Kelvin.
Thank you, Bogolo. And I was supposed to make opening remarks, but I'm very happy to make closing ones. And I think this is a significant moment for the African insurance industry, because what we're seeing here today is an African initiative, an African-owned platform for responding to the resilience needs of the continent. And what we're seeing is a significant ramp-up in the private sector ambition to finance adaptation and resilience. And really, it's coming out of an African-owned organization, which is the Nairobi Declaration on Sustainable Insurance, which started in April 2021 only at a market event that was led by UNEP PSI in Nairobi and was hosted by ICA Lion. And over a very short space of time, that group of signatories has grown to 85. And so we now have a large body of African insurers that are saying that they want to come to the table and provide solutions to the resilience needs of this continent. So that is very exciting. I heard an analogy which is, I think, similar to what the Nairobi Declaration has been through. And it was an analogy of the process that the COPs have followed. It was from an African leader yesterday. And what she was saying is that for the private sector, Paris was like the engagement, then Glasgow was like the marriage, and here at Sharm el-Sheikh, it's like the consummation, where we're deciding to have children and to move forward and really have an impact. And at future COPs and future kind of announcements of the Nairobi Declaration, we're going to be celebrating the children that are growing up and having a real impact. And so I think that, for me, is exciting. And what we're going to see going forward is that you have real transactions that are supported by this initiative, and we're going to be able to celebrate those as the children. Also importantly to say that there are lots of other global initiatives like the Insurance Development Forum, like the Global Risk Shield, which will be announced on Monday, the 14th, here at COP, And those are important initiatives doing broader work in disaster risk finance, and we're keen to collaborate with them, to work with them, because much more needs to be done. What we're saying is there's a need for much more risk transfer, much more disaster risk finance, and this initiative is just ratcheting up the ambition of that. And so we're really excited, and thank you very much for attending. We're happy to take further questions afterwards, but I think we, Bogolo, are out of time.
Thanks, Kelvin. We have been running against the clock, but I see, just as I'm about to close, that Dr. Mahmoud is here, and honestly, the events team cannot kick us out when he's here. So, unfortunately, Mayor Akisoya and her team had to also leave, and a minister had to leave, but they both believed in the program, had hoped to speak at some point, but we ran out of time. I'm going to ask for 3 more minutes. Thank you, Anjali, for Dr. Mahmoud to come to the stage. And as he prepares himself, I want to remind the room that we are here to listen and hear about the commitments from the insurance industry signatories of the Nairobi Declaration on Sustainable Insurance, and they have committed towards the Africa Climate Risk Facility. And Kelvin just stated just exactly what makes this facility different. And I'd like to welcome Dr. Mahmoud Muhyiddin, the climate champion for COP27.
Right. Thank you so much for giving me this opportunity. A bit late in the session and a bit late in the day as well. But I think we have a couple of events and then 4 other events after. So anyways, let me just talk insurance then. So for a few years, I was responsible for the insurance industry in Egypt from the policy perspective, when we had the Ministry of Investment responsible for the non-bank financial services. At the time, still now, the contribution of the insurance sector left a lot to be desired. If you take the percentage of the insurance contributions to GDP as a ratio, it was around 1%, less than 1% when I left. It didn't really go by much for like 5 years. It managed to increase by like 180% in 3.5 years. Not bad, but coming from low levels. We have old insurance industry in this country. At some stage, they were among the best in the world. And then different phases of development complicated the progress of the insurance sector. But now, after opening up the system for private insurance companies, for foreign insurance companies, there is a better ecosystem, including the enhancement of regulations, adopting international standards, and raising the awareness of the importance of insurance on the life and the non-life part. Linking the whole industry to climate and development, and I appreciate the work that has been done linking insurance to development, especially the work of the Insurance Development Forum. I'd like just to put matters in this perspective. If Paris Agreement is to be fully operationalized, we have the work of insurance sector in mitigation, mainly to finance long-term business in areas related to decarbonization and renewable energy. There could be a great work as well for discipline in order to encourage companies and cities and whole countries to decarbonize. When it comes to adaptation, we're expecting insurance sector to work closer in risk mitigation, and this is the core business of insurance, especially with this new initiative of the Secretary General of the UN to establish an early warning system. Here, there could be a great opportunity for the insurance sector because this area of work in adaptation, we know that the private sector contribution is as low as 2% globally and is around 3% of total finance for adaptation based on the latest report from the Global Center for Adaptation in the Netherlands that told us out of the $11.4 billion, only 3% came from the private sector and mainly from institutional investors and philanthropies. Now, we have the great addition of the agenda for negotiations in Sharm el-Sheikh, loss and damage. I'm very pleased to get this update of the commitment of the insurance sector in Africa for around $14 billion. This is a pledge. For the pledge to be operationalized, there should be contribution, there should be subscription, there should be underwriting. So there is a growing opportunity here for the insurance sector. I don't know yet, nobody knows yet, what would be the outcome of the negotiations. We had now the item on the agenda for COP27. Negotiators are going to be working hard in order to give us some sort of an outcome that we can work with as non-state actors, including investors and the insurance companies. But I think if the early warning system is in place with good arrangements that will cover us on the substance of the loss and damage, the insurance sector can really identify areas of work, mainly on the prevention, that could be very helpful. But if the first line of defense is failing and the second line of defense is compromised, mitigation, adaptation will have nothing but the main core business of insurance to step in and to support the work of the loss and damage. But this is for the future kind of losses and damage. The stock of loss and damage is a different story, but again, we can really bring the wisdom of the insurance sector in that. What I'm trying to say, if there had been so far good contribution from the insurance sector for development and climate, and there is no contradiction between your work there as insurance companies, as in development or in climate, they are complementing each other as established by evidence in many countries, including in Africa, there will be even more business for that. What will be missing then is the thing that had been really the obstacle for the development of insurance in developing economies and emerging markets. Lack of awareness of the service that needs to be enhanced to prepare people for what they need to be insured against, and good support when accidents, events, mishaps, irregularities occur. So this is basically the issue of culture change needed to cover the industry and society alike. Having said that, there could be many opportunities, and we've been working closely with the Atlantic Council on the role of the insurance sector, with the champions, and there could be many opportunities to get together practically for an implementation COP to identify better what could be the areas, what could be the details of these areas of new business, especially in emerging markets and developing economies. Having Bugulu just next to me here, I would say with emphasis on Africa as well. Thank you so much, and great to be with you here. Thank you.
Thank you, Dr. Muhyiddin. Thank you for that statement of support for the African insurers and reinsurers. And lastly, to reaffirm, to restate, we are here reaffirming the African insurance sector's triple role as key climate mitigation and adaptation agents, risk managers, risk carriers, and investors. And the sector does so through its commitment to a $2 billion Africa Climate Risk Fund and facility, and this fund will transfer a $14 billion worth of risks from most vulnerable African population through insurance solutions. Ladies and gentlemen, thank you for your attention and good evening.